What's going on, everybody? Thanks for joining us for another training. And tonight we're going to talk about a lot of things, but specifically we're going to talk about your retirement. We're going to talk about your retirement, how you're going to take back control of your retirement so that you don't have to ride these crazy roller coasters. Greg, you've seen what's been going on in the markets lately?
I have, man. I'll tell you what, if you were to retire in the last 30 days, your retirement income would be based upon the right day that you actually retired. I mean, Monday, right? Yesterday was good. Last week was, it is crazy. It is all over the place. The market is so crazy.
It's insane. And I know all of you are looking at your statements, logging into your accounts. I got this private REIT from back when I was in, my financial advisor days. I bought this private REIT and it was doing really well. Well, I got my quarterly statement and all of a sudden the thing dropped like $20-some thousand. And I call them up. I'm like, what is going on with this? Like, it's a REIT, like it shouldn't drop. And they're like, we revalued our assets. And yeah, the NAV, the net asset value fell. I couldn't believe it. I didn't think I'd see that. But I mean, that's just showing you there's a lot of things going on out there. You've got, my gosh, you got, stocks going all over the place, up, down, up, down, up, down. You got real estate starting to lose some value. Some of the values around the country are coming down in real estate, primarily because of the rising interest rates and the Fed's actions. And you even got Brandy live on the show. What's up, Brandy?
Brandy.
Happy to have you on. Gosh, I haven't seen you in a while. Everybody is in for a treat now. Awesome. Well, Greg, where should we start? Because we got a bunch of people on here that are probably wondering, well, I don't know what to do. I've got this old 401k. I've got these IRAs. Like, I keep hearing about this take back control of your money, this BYOB and self-directed IRAs. So where should we start?
Maybe we kick off with just kind of a quick little 101 on the self-directed stuff and then talk about, I was thinking today, talk about what people are doing with their IRAs and, forecasting what the next 12 months looks like and what people are investing in and using their IRAs or non-IRAs. But maybe start there. Thoughts? Is that good?
I think that's a great place. I mean, yeah, I remember 2013 or 14 is the first experience I had with self-directed IRAs. I mean, when I was an advisor, we'd heard about them. And when I heard about self-directed IRAs and I talked to the managing partner and they were like, oh, you can't do those. Those aren't good. They're very risky for the client. That's what I always heard, like as an advisor, because we couldn't sell them. It was selling away. So yeah, let's dive right in. Kick it off. I think a lot of people, don't understand that a self-directed IRA is identical to a regular IRA, or a self-directed Roth is the same darn thing as a regular Roth. I think a lot of people think that by adding the self-directed, it's a whole different animal. Let's cover that.
That's a good place to start, because I feel like I even maybe don't do the best job explaining that. Some people are like, oh, I love that thing you talked about, Greg, where I can put my retirement money in my own investments. So I want to get a self-directed IRA. I want to, move my, I don't want my Roth or my traditional. I want the self-directed. Chris makes a great point. Self-directed is just, you put that in front of the words of your Roth or traditional or simple or SEP or 401k. So self-directed, which is what our company is licensed to do, is we help individuals move their funds, all or a portion of them, from wherever they currently are to a licensed entity like ours. Our trust company has been around 12, 13 years. And from there, you will establish a Roth or traditional or SEP. So let's say you have a Fidelity account and it's a Roth. I can move my Fidelity Roth to a self-directed Roth. And now it's sitting there. You can now invest in kind of whatever you want in the alternative asset space. If you're looking to invest and continue to invest in the stock markets and the ups and downs, et cetera, of this world, then you'll leave that portion of your money with your financial advisor in the stock market. But if you're looking to, take control of your funds and invest it in things typically passively and things that you understand. And I would say 70% of our investors, it is real estate based, and real estate's, it's big, it's a wide range. And I say that on purpose because many of our investors are in all parts of real estate, from wholesaling to notes to hedge funds to flipping properties or to buy and holds. The only part of real estate you can't do with the self-directed is you can't buy your own home. You can't buy a vacation property that you're using. That would be prohibited. But almost everything else in real estate goes. And so it doesn't have to be real estate either. You can invest in businesses. You You can invest in a turkey farm. You can invest in, almost any kind of business. And that's what's unique and exciting about it. Because, this subject's kind of a big subject because, people don't realize that whatever you're passionate about, whatever you want to learn more about, or not necessarily learn more about, whatever you already understand a lot about is what you should be investing in. Like right now, when someone comes to you and says, hey, Chris, I got this great deal, blah, 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 blah. And Chris, typically in the past, I know 10 years ago, or maybe 12 years ago, he would then, if he liked the deal, his LLC would invest and he would partner or whatever the case is. And so then when that, it came to fruition, the proceeds or profits would go back to his LLC and he'd pay the normal taxes. When you have a self-directed, and I go to Chris and say, hey, I got this great opportunity in a business or real estate deal. If he has a self-directed IRA, a Roth in particular, which is ideal, those monies then go directly into that investment. And then all of those proceeds and profits are tax-free. They grow tax-free. And if it's a Roth, it comes out tax-free. And so it is the most different, it is a game changer on how you live your retirement years, what we're talking about today. And it's hard to talk about this subject because frankly, when you talk about the IRS or CPAs or taxes, it's typically boring. And I got to tell you that the sexiness about this is if you understand the rules of what you can do and how you can kind of use the rules to your favor, it is the difference in you having $1 million or $2 million account or $500,000 to $1 million. The power of compounding interest and not paying taxes on your gains is incredible. I mean, we've played this game before and we can do it another time. But if you just start doing the compounding interest calculator, the difference between 5 years or 10 years compound interest is if Chris and I do the same exact investment and his is outside of his IRA, I'll have more than double the money that he will. So it's super critical. So anyways, self-directed is frankly that. And I will say there's over 80 million IRAs in the United States. And of those 80 million, only 4% are self-directed. 96% of Americans don't self-direct. And I'm not saying all Americans should do this. This is really meant for those that want to take action and focus and look at their retirement accounts. And so I can go on and on, but I think I just wanted to first give a little, premises on self-directed and how that kind of works.
No, I just pulled up that calculator you always like to use. It's right there, investor.gov. It's a calculator that allows you to show compound interest. I mean, and you can really see, what things do. And you've heard this all before, where someone shows you, well, what is the time value of money over time? I mean, if you put $1,000 in a Roth IRA and every month, well, you probably couldn't do that, but every month you put $500 in every single month. I mean, just look at the results. That just shows the power of it. And we always talk about this because a lot of people don't really understand it. And then, you've heard the penny doubled every day for 30 days story, but you can just see, I mean, here's where you start seeing that growth. And we're showing 8% and 9%. I just did two different things, but you start seeing how this really just starts to go crazy. It really builds faster and faster and faster.
Yeah. And the point of that is just is understanding the power of compounding interest, but doing it inside, you do that inside of a Roth or an IRA account. And so as boring as this subject can be, and we try to make it as exciting as possible, because if the exciting part of it is the numbers. And so if you just start plugging in these numbers, how much you can save and how much you can make, I mean, truly just compounding at 8% or 10%, a difference of 2% over a 10-year period is hundreds of thousands of dollars. And so I share that with you because typically when you're in alternative assets, especially for me in real estate, my goal is to make a little bit more than what I would do if I was to, in the traditional stock market. So, which is not too hard right now, but if I could just make 2% more than if whatever I was doing before. So if you're on average over the last 5 years, not the last 5 months, because on average you'd be down, but in the last 5 years, averaging 5 or 6%, I'm not here to tell you got to make 20% of your money. But if you can go from 5 or 6 to 7 or 8 or 9% per year, those few percentage points on compounding interest will completely change your retirement game. I think we've talked about Charles and Mary Jones, that example often. A good example of that is when you go to retire, and if you've created this self-directed account and it's compounded and grown, on the site real quick is htccalculator.com. htccalculator.com. You can go to that, the calculator as well. I think you're using a different one as well. But if you have $1 million in your retirement account and you go to retire at that point at 9%, right? That's $90,000 a year that you'll make in retirement without your capital, your principal going backwards, which most people outlive now their retirement dollars. And so, but the power of what I'm talking about is if Chris were to have $1 million because he did it outside of his IRA and I did it inside my IRA, which then I basically would have almost 2 million, literally 100% more than him. I would then get on interest $180,000 a year during retirement rather than Chris's $90,000. And all I did was I focused for 10 or 15 years of using my IRA to compound and not pay taxes. I can't say it enough. Every single person must have a retirement account and be using this to leverage and compound. It will prepare you for retirement better. And even if it's just $5,000 a year. I know a lot of people are like, you know what, I'm going to wait to start this account. I'm going to wait until I've got X, or I'm going to pay off. I got 17% credit card debt. I'm telling you, don't wait, because what will happen is if you wait to pay off any debt you have, you're going to pay off the debt and then magically you're going to have new debt. And so you're going to wait to pay that off. And so it's just going to prolong your preparation for the future. And I got to tell you, for me, it's really about sleeping good at night. Now it's about like, just think about your retirement account or your bank account. When your bank account has a big number in it, do you sleep better at night? I think so.
Of course.
Same thing with retirement account. So this is about you sleeping better tonight now. So then also when you go to retire, you sleep better at night. So those little things give you confidence, and it actually allows you to make better decisions when you have a little war chest or you have a bigger retirement account. It allows you to, make decisions with confidence. And so anyways, Chris, I went on a tangent, but I get excited about it.
No, I love it. And I got a couple cool visuals. I'm very visual, Greg, in how I see things. So I'm hearing everything you're saying, and a lot of people are. And Justin over here in the question says, how does a Roth gain compound interest? I want to show that, but first I want to hit that tax one. I found this really cool table, and this just drives it home. I mean, a Roth IRA, or something that's growing tax-free versus taxable. I mean, look at the difference right here. So this is just showing, somebody putting money into an account of $10,000 a year, and it just shows the difference between the taxes that are taken from you. So, I mean, that's a massive difference over time, over 30 years, $854,000 just because of taxes. And then I've got another one that I'll show you that really kind of just puts visuals to the question that was being asked by Justin. So you were asking, how does it compound? Well, this is what Greg was saying. I just found a little example here on the Motley Fool. So this is just $1,000 growing at 10%. So as you can see, the first 5 years, it made $611. No big deal. It wasn't a lot of money. But now, every single year that this goes, so this is just doing 5-year blocks, this $611 is now also earning 10%. So every single time, see how much faster this goes? The next 5, now it went to 983, 1583, 2551. So this is the same dollar amount. We started with $1,000, but see how much faster it's growing? And it's doing that. And this is how a Roth IRA gains compound interest. But I also showed you the benefit of not paying taxes on it, because there's several killers. I mean, there's inflation, market volatility, but taxes are one of the biggest eroders of wealth. So if you start to find out how you can put money in tax-free environments, you really start to, keep a lot more of your money. And not only that, here, the compounding. So compounding with tax-free, that's a dangerous combination. And that's what a Roth does. And you can just see that benefit right there. So I'm just trying to put some visuals behind what you're saying, Greg.
No, I appreciate that. I mean, the numbers is really what should motivate anybody and what gets super exciting. So, and I remember when I first started doing mine, I think my first year I put away $2,500, and I was like, this is pointless. It's just so small. I don't even know what I can do with it. And we can talk about that here in a minute. But I'm so glad I just kept with it every single year. Because before you know it, 5 years from now, you're gonna look back and I'm like, I'm so glad I started now. So I know there's many of you that we've spoken or maybe even heard us talk about this subject, and you're like, I got to do this. And that's the other thing I was going to say real quick is, if you have an old 401k with a previous employer, you qualify for this. You can roll over your 401k into a self-directed account. Or if you have, a retirement account, an IRA or whatever, you can move it. The only thing you can't move over for the most part is a pension where you're currently working at, or also a 401k where you're currently working and making contributions. But everything else is for the most part fair game to move over and a portion of or all of. So yeah.
I'm just answering a couple of questions here. Yeah. So folks, if you get questions, definitely throw them over in the Q&A. Anytime you see me looking over that way, that's because I'm checking out your questions and we're going to get to them and make sure they get answered. But, another thing too, I can remember back, 2014, I think was the first time I saw Greg speak. And I remember he got up there and it was him and this other guy, Mike, and they were talking about money. I was a financial advisor and, I thought I knew everything there was to know about money. And they start talking about what they're doing and how they're growing it. And, the early years talking about like being your own bank and how they were using just non-traditional vehicles to grow their wealth and where to store their wealth. And I remember Greg at the end of the presentation, he says, the ultimate in real estate is being the bank. Now, I didn't really have any concept of what he meant there, but what I had saw is two incredibly successful, wealthy guys up in front of a room talking about money and growth and investing in a completely different way than I was even accustomed to. And that was 14 years into being a financial advisor. And I went back and he had a booth set in the back, and me and my wife went back and set up regular IRAs, not Roth IRAs. I think I set up one of both, but I had a regular IRA. Well, 16 actually would have been, sorry, I'm getting my years screwed up. 2016, I left one of the big financial companies I had been at for quite a while, and I had a 401k. It had about 50 grand in it. And I rolled it into that IRA that I set up in 14. And ever since that day, okay, when I rolled it in there, all I have done with that money is lend it out on real estate deals. I've done, I don't even know how many of them. And just the other day, Greg, I went on the new Horizon website, the Horizon Trust website, and I was looking at my account, and there's this really cool thing. You can like go back to the, all time and see what you've done. I've averaged, and some of you, this won't be a big number, but I'm pretty darn conservative in what I do, but I've averaged 9.11%. Literally, like I know a lot of you, when you're looking at your 401k statements, it kind of looks like this. You know what mine looked like on my Horizon Trust account?
Yep.
Swear to God, that's what it looked like. There was none of this. That didn't exist. It just went straight line. So when, Kevin asked the question about like, what was that thing about sleeping good at night? That is how you sleep good at night. When your money,
100%.
when you don't wake up and your money's down $20,000 and you don't even know what the hell happened, when you just know that every single month a check's hitting your account and your money's growing, that I can't even begin to tell you. I mean, I almost feel like I'm just so used to it now that I feel spoiled. I almost feel like it's just the norm. But I remember the old days of when I did get those statements from my 401k, my brokerage accounts in volatile market times like 2008, 9, 10, 11, 12, shall I keep going? And I remember just like every day you were on pins and needles, like you were staying up late, just watching the news. What are the markets going to do? How much am I going to lose tomorrow? What do I do? I don't worry about that anymore. My wife doesn't even know what the heck she's got in her account, but hers got the same darn line. I find a deal and I'm like, honey, you want to fund this deal? She's like, yeah. We call, I don't even call Brandy. I just send Brandy an email with the deal and the direction to invest, and she takes care of it. I don't know. A lot of people think this stuff is complicated. There is not, what's complicated? Figuring out what to invest in your 401k. That's complicated if you really think about it, because you have no knowledge of what it is you're investing in. So when you're looking at it, you're either taking advice for someone or you're just looking at conservative, moderately high risk, or whatever the categories are, international, you don't even know. And you're just like, I don't know. It's almost like just put a blindfold on and just like put your finger on something like, oh, all right, I'm going to go with that one. But most people today in their 401ks or the retirement accounts, they take the easy way. They go with the retirement date funds, the freedom funds, I'm going to retire in 2045. So I'm going to put my money in the retirement 2045 fund. All of those, like target date funds is what they're called, are the highest fee funds out there. when I was an advisor setting up 401ks, man, I loved putting those in there because I knew it was about 1% more that I got paid on those things than any of the other funds, because they were, you make it easy for people. You tell them, hey, you don't have to do anything. You just put your money in this, it self-adjusts, and when you retire, you're going to be rich. And everybody plows their money in it. And I made a lot more money. And, I'm not proud of that, but that's what they taught us as an advisor. And then I found this other side from Greg with self-directing, and now I can invest in anything. I've looked at the self-directing. I've thought about crypto, although I haven't done crypto yet with my IRA, but you can buy Bitcoin and Ethereum with your self-directed IRA. You can't do that with your regular Fidelity IRA.
Can't buy FTX though. Can't buy FTX.
Good. Well, that's probably a good thing, man. Everybody should see the meme that we just put up on Instagram about FTX. You guys will die if you watch the Instagram. It's a little video we did about FTX. Holy crap. Maybe I'll play it. But you could invest in Bitcoin or Ethereum if you wanted. You can invest in real estate. You can lend on real estate. Like Greg said, you could partner. And I think that's one of the coolest things, So let's just say me and Greg, we're friends, and Greg's got a self-directed and I have a self-directed. Now I can't buy a property with myself. I can, but you shouldn't because of self-dealing rules. So I don't want to take money from my IRA and buy a property like a rental. But what I can do is I can call, hey, Greg, I got this property and I was wondering, will you lend on this property? And then and then we can figure out the terms. And then when you need money for a property, I'll lend you from mine. So we basically just create this relationship. Greg lends me money. I lend Greg money. We don't have to worry about any self-direct or self-dealing rules. And we could even find ways to go in and partner on deals and do really cool things. I mean, you can't do that with regular IRAs. Now, the sky's the limit. You want to buy gold? Buy gold. I mean, that's the coolest part about this. And I love it because it's truly the simplest way for you to begin taking back control of your money, because now you truly do have control. You're not restricted to 15 different mutual funds that you don't even have a clue about, or you're not restricted to just buying stocks, bonds, mutual funds, and ETFs. This opens the door for you. Gives you all that control, allows you to invest in anything, take as little or as much risk as you want. Heck, you can even buy stocks with your self-directed if you wanted. I mean, a lot of people are like, oh, well, what if I want to buy stocks when they go down? Great, buy stocks when they go down. And I think the biggest barrier with self-directing is people just don't understand it. They haven't heard about it. They've maybe heard, things in the wind about it, but nobody's ever really brought it to them and showed them. And because of that, they think it's complicated. They think it's hard. They think it's expensive. How do you get by that, Greg?
Well, look, the one thing I want to offer and to say is there's no hard sale here. So if there's someone, for those of you that want to set up a call and do a strategy session with one of my team members, that's probably the first best step. It's just to find out where you are right now, because everyone on the Zoom is in a different place, either starting from scratch or has an IRA or an old 401k or a current. And I just want to say that if you email us, we will give you a free, basically hour strategy session to talk about what kind of account you might have, what you're trying to do, what kind of investments you're trying to use or buy with your IRA, and we'll kind of walk you through those steps. And I think that's what's very unique about our firm is we're boutique. I mean, you can get a hold of me. I mean, I've already posted my email address. We want to help you and answer your questions so the process is seamless. And frankly, the first time might be the clunkiest time when you do your first investment in an IRA because it's just new. But after that, it should become very seamless. And so the type of account or how you do it, we'll help you through and we'll walk you through those steps. It's not that, and people try to make it sound like it's really difficult, but it really is not. But it is kind of, it's hard. It's hard. Change is hard. Just moving your, from one CPA firm to another after you've had a CPA maybe for 5 years, it's a little bit hard. And so once the first step of just doing it will help you through the process. It's really easy. So.
I believe it was Dorothy was saying, she went to her CPA and, told them, I want to buy property with my self-directed IRA. And the CPA said, well, that would have to be a distribution and you got to pay taxes and penalties on that. Why would a CPA say something like that?
They must not totally understand it and how it works. First of all, if it's truly a property for an investment, you're not using the property because you would have to make a distribution and pay taxes. But if this is investment property you're not using, and self-directed, I mean, that's the other part. If your account's not self-directed and you're trying to use your retirement money to buy a property, and you're just going to cash it out, you're going to pay taxes. And so there's no benefit. That's why you need a company like ours licensed. You move the money over to us and then you buy that property. The other thing that's really cool, and I don't want to get too deep into, was basically getting, you can borrow money. Your IRA can borrow non-recourse money, 50 to 60%. So let's say you're buying a property for $200,000 and your IRA only has 100. Your IRA can actually borrow $100,000. We actually have the relationships that will lend the other $100,000 to you for you to buy these different properties. And there's different things that, there's little things that you need to know when you do that, but we'll explain that to you, UBIT taxes and things like that. But it's definitely, a way of, I'm sorry, Dorothy, you can for sure buy a rental property. Because I assume, Dorothy, you already have a real estate LLC and is probably already owned by you. So if that's the case, that's accurate. You can't use your IRA funds that come into the real estate LLC or buy, commingle your non-IRA and IRA money. What you'd have to do, Dorothy, is set up a new LLC. Potentially, there's a couple different ways to do it, but one would be a different LLC that's owned by your IRA. So your IRA would move money from Horizon to this new LLC, and that LLC would buy the rental property. And that's how you keep it inside of your self-directed IRA, Dorothy.
Yeah, definitely can be done. So I hate to say this, but maybe find a new CPA. Just pointing out the obvious. So Mark said, and I think a lot of people think this too, Mark said, is rolling over an existing IRA to a self-directed IRA a taxable event or subject to any penalties or fees?
Nope. There is no penalties, no fees. Unless there's like if you've invested in an annuity or something, you might have some fees, but 90% or more of your accounts, whoever is on this call, you can move those over tax-free. And so just so you know how that works is once you open up an account with us, that takes about 24 to 48 hours. The longest part is then we request the monies from wherever you're at to be, let's say you're at Charles Schwab. We request those funds to be moved over to our trust company and put into your account with us. And that process can take sometimes 30, 40 days. We're pretty good. I feel like we do it faster than anybody. And that typically still takes 2 or 3 weeks, which is about half the time that the general, our competitors take. But that if it makes sense, if you think about it, right? And we're asking for Charles Schwab to give up your money and send it to us. They're not in a hurry to do that. They're losing the money. So it does take them a few weeks. And so that process, once the money arrives, by the way, again, the money is sent via check or wire to Horizon Trust, FBOU. So there is no taxes paid. It's being transferred over from that account to your account with us at Horizon Trust.
And then Janice was asking, starting from scratch, so from ground zero, how do you set up an IRA account, a self-directed IRA account?
It's super easy. Again, I'm going to keep saying, shoot us a quick email. We'll do a quick 30-minute call with you. And it's a simple application, truly a simple application. We take 10 minutes over phone with you and help you fill it out. And then we talk about which kind of account you're looking for. Like if it's a Roth or a traditional, right? The difference between those two things are, do you want to pay on the seed or on the crop, right? Does that make sense? So if you do a traditional account, you get a tax write-off today off, what you contribute. And therefore it grows tax-free, but when it comes out, you pay taxes. If you do a Roth, you don't pay taxes, and you don't get a tax write-off today. But when you, and then, cause you've already paid taxes on the money, it grows tax-free and comes out tax-free. And so, it's easy. We'll talk you through and talk about the different accounts for you that makes sense. And then you make a contribution. If you're looking to contribute more than $5,000 or $6,000 a year, it's $5,500, $6,500. You can actually, there's other types of accounts, 401ks. We can open up a solo 401k where you can actually contribute more than that every single year. On how much you make. So if you're looking for that, again, a strategy session with my team, we will help you with figuring out what is the right type of account for you.
Yeah, no, it's funny. I just looked on Google. I was just curious, how much money is in qualified retirement accounts. Like in this country, how much money is actually in qualified retirement accounts? $40.4 trillion. Now, Greg, out of that 40.4 trillion, how much is actually in self-directed IRAs?
It's probably around 3 to 4, probably around 3%. So what is that? $1 trillion.
And then, it's funny too, folks, as you poke around in like the upper echelons and, a lot of the people, that might be considered wealthy, you'll find almost all of them make up that 3%. Because they have advisors that aren't just trying to sell them something. A lot of times their advisors or family offices are on retainer. So because they're on retainer, their job, the fiduciary capacity that they have to act in is to bring that individual or that family the best thing for them. And I mean, you can't really shake a fist at the fact that they bring them self-directed IRAs to give them the control. And James, I love your question, and I want to answer this one live. James said, trying to figure out what's in this for you, Chris. You're putting a lot of time and effort into this. And that's a valid question. And it's got a very simple answer. First off, me and Greg are good friends. So I love helping him build Horizon. I don't have ownership in Horizon. I don't get paid referrals. Greg's not just sending me big checks every time we do these things. He paid for the marketing on this. So I was happy about that. But what's really in this for me? I want you all to think about something, because this is going to make a lot of sense. If you set up a self-directed IRA, what would be one of the first things you'd want to do after you set the self-directed IRA up? You'd probably want to start making money, right? Which would mean you'd need to go out there and you'd probably need to find yourself a deal or two. Maybe you don't know where to go find a deal or two. Well, this guy, Chris, created this software called Private Money Club. And lo and behold, somebody can come into Private Money Club with their self-directed IRA money, and they can go in here and they can just say, I want to browse some deals. I want to look at active deals. Let's just pick the first one. Just got posted today by this guy, Bo. All right. So he's got this deal. He needs $95,000 for a single family flip. And then I could look through it all. I could look at the financials, the properties, even got an inspection report here. And if I want to start lending him money, well, darn it, I just click well, you can see I've already sent him. I said, I want to see your loan proposal. I asked him a bunch of questions because I'm interested in funding that deal. So that sort of makes a little bit of sense. So James, what's in it for me? When your money's in a self-directed IRA, I know you're going to be looking to make more money. And you're probably going to look at real estate. Maybe you don't want to buy your own rentals. Maybe you want to just be passive and you just want mailbox money like so many people. Private Money Club's a pretty darn good choice to find that. And yes, Private Money Club costs $1,000 a year. So that's what's in it for me. My hope is the more people I get to Horizon Trust so that they can take back control of their money, the more of them will then look at Private Money Club. It's a very symbiotic relationship. So thanks for asking that question, though. All right.
Why would someone use us over Schwab when they can go right into a Schwab location? I was going to answer that real quick. There is, just to be real clear, and I love these open, honest forums where people ask, well, what's in it for you, or should I move? If you plan on continuing to do traditional marketable trades and securities and mutual funds, there's absolutely no reason to work with us. There's no reason to. So if you plan on just continuing to be in the stock market, our platform and license and company is made for those people wanting to put a portion of or all of their monies in alternative-based investments that are not necessarily publicly traded. Now, I did see someone had a question earlier, but you actually can. That we do have a platform where you can also invest your money in the stock market, your trust account with us. But just being real honest with you, if you plan on just working in the stock market, there's no reason to move your account over to us. Now you'd stay where you're at.
Yeah. And then, I was asking Brandy, because she's on here, if you might have something like this. Steve was saying, is there any mind maps? And Steve's probably a lot like me, very visual. He kind of just wants to see something visual that shows, okay, if this, then that, like almost like something just that shows the pathway for how you would start self-directing. And for some reason, correct me if I'm wrong, I thought I did see something either on the website or a brochure or something that you showed kind of that flow. Did you have something like that?
I know we do. Steve, if you send us your quick email on that, I know by tomorrow that Brandy could send it to you if she doesn't find it while on this call, but I know we have something like that.
Yeah, these questions are great. They really are. And you know, the other thing too, and I know you kind of just hit this with Seth's question about, you know, why wouldn't you just open an account at Schwab? You know, the big brokerages, the Schwabs, the Fidelity, especially Fidelities, have kind of heard, you know, and maybe seen some of their accounts leaving, because when Brandy, you know, sends them the transfer request, they're like, great, there goes another $500,000 account. And they're like, wait a second, where's this money going? Self-directed IRAs? Okay, well, marketing team, start telling people that we do self-directing as well. It's to me, like, I don't even know how it's legal what they do, but they, you know, Fidelity says you can do a self-directed IRA with Fidelity. And that is absolutely false. Greg, do you want to hit on that? I can't stand it. I think it's just such a dirty way of marketing, because they're not giving the whole truth.
Hey man, let the market, man. Good for them. They're marketing. So no, I actually think it's funny, because a lot of these traditional marketplace brokerages have created a self-directed account. You still can only put it in marketable securities. You can't go and buy an investment property or loan it to somebody. So they don't have the flexibility that it does with a company like ours. So, and again, this is no hate against financial advisors or these brokerages. There is a place for most of America there. And most of America should not be self-directing. Typically, those that are self-directing are active. When I say active, they're paying attention to their investments a lot more than just putting money away and not paying attention. They're passively, they're passive in their investments, but they are, doing real estate typically, or precious metals, or investing in different businesses. And so it's definitely not for everybody.
Yeah, no, I think that's definitely an important thing to call out, because, it's just like anything else. I mean, if it's a fit, if it solves your problem, then go for it. But, for the average person that just wants to have the easy way, they don't want to have to learn something new. I mean, that's why Fidelity and Schwab and all those companies can spend that much money marketing. I guess I'm just a little harsher on advisors, just because I used to be one. And I think I'm a little bit harsher on brokerages, because I've seen behind the curtain, and I didn't like what I saw. Does it make sense to contribute to my 401k with my company matching up to 5%, and then roll it over once a year into a Roth and pay taxes on it at the time to allow it to grow tax free? So let me hit you can hit the Roth conversion part, but let me just hit on the match thing, because this is something that's important. I think a lot of the stuff that I teach and our team teaches, about being your own bank and everything, people sometimes they want to just stop putting money into their 401ks at work, even though they're getting a match. And some people would disagree, but I think that's silly. If you get a match of 5%, then absolutely continue to contribute 5%. I wouldn't put any more in. I mean, I would take the difference and set up a Roth IRA in a self-directed account. But that 5%, it's technically not free money, because you work there. So you're putting the time in. It's a employee benefit, but we can't give you free money. So don't ever, walk away from the match. Now, the second part of that is he's saying, every year, should he roll that into a Roth if the company allows him to?
Look, I'm a big, depending upon when you're retiring, I'm a big proponent of as much money getting into a Roth account or bucket as possible. So if you can do it and convert, absolutely. So some give you that option to roll money into a Roth, and the answer is yes. And for me personally, obviously you can consult I always say, consult your CPA.
I think the thing when you're converting, I think it makes all the sense in the world, especially in this, a lot of people say, oh, we're not in a low tax rate environment, but we really are, one of the lowest in history. So I think right now, it makes a ton of sense, because everybody, if you're looking into the future, even a short while, you can see what the government's doing. They're going to raise taxes. They have to. I mean, come on, look at how much money they just spent. But they're going to raise taxes. So if you've got money in a traditional IRA and you've got a long time horizon before retirement, you don't want to pay tax on all that growth, especially in the self-directed world. I'd love for you, Greg, to talk in a second about the, oh God, what was his name? It just slipped my mind. His Roth blew up, and they made a rule that for the contributions. What's his name?
Peter Thiel, PayPal.
Peter Thiel. Yeah. So we'll get to Peter Thiel in a second, but I think right now, it makes a ton of sense to convert or do what they call a Roth conversion. If you've got money in a traditional or an old 401k, converting it over to a Roth, you're going to pay the taxes on it, but you're going to pay the taxes on that money anyway. Do you want to pay lower taxes or higher taxes? The only thing you got to be very careful of, and this is where I'm going to refer you back to your CPA or tax professional, is you want to make sure it doesn't bump you into a higher tax bracket. It's a simple calculation. Every CPA can do it. Just say, hey, if I convert this much of my Roth, or if I convert all of my Roth over to a, or my traditional to a Roth, I'm stumbling on my words, how much is that going to hurt me from a tax standpoint? Am I going to bump into a higher tax bracket? And if you are, then reduce it down, and then do sort of what he was just talking about, where you do a little bit each year. That'll lessen the burn. But can you just tell the story about Peter Thiel? I think that's amazing.
Yeah, I mean, Peter Thiel used the system, man. So Peter Thiel was one of the founding partners of PayPal, right? And so he put $2,500 into his his ownership was owned by in PayPal by his Roth IRA, and not him personally. And imagine starting PayPal and having your IRA own that interest. He sold it and then did something bigger after that. You can Google and figure out what he did. I don't know if it was part of Uber or something crazy, but anyways, today his Roth IRA is worth over $5 billion. $5 billion. And so it grew tax-free and will come out tax-free. So what they did, the government, of course, as they like to do, last fall, about a year ago, they changed the rules, and you can now no longer make, you can only make up to $10 million per year. So I'm sorry, you can only do $10 million a year. I still feel like that's enough. I will say that over $2 million, they'll do an audit on your account. But again, still plenty of room to make a lot of money. But he worked the system. Look, and the list goes on and on. I mean, there's Mitt Romney and his retirement account. You get these big masses when you invest in things you understand. You don't do it when you just put it away and just say this is for the long haul, and you watch your money kind of go up and down for 10 years. So
David and Dorothy, can you search by self-directed IRA opportunities on Private Money Club? You really don't need to, because all the opportunities on Private Money Club are opportunities that you can use your self-directed IRA for, because they're all non-owner occupied real estate deals that are owned, that you're lending to another entity. So it hits all those levels. So David and Dorothy, you don't need to search by self-directed IRA opportunities. Every deal on there is a self-directed IRA opportunity. You just got to find the opportunity that works for you. And then we had another question. I don't know if you want to go a little bit deeper, solo Ks and just some of the things with solo Ks that really make that, and for the right person that's got a small company and maybe they're the only employee, they want to put more money away tax deductible, but they want to be able to use that money. Maybe they want to be able to take that money out in loans. Can you just hit on that real quick?
Yeah, I'm going to hit on two things. I saw a question on fees real quick, but I'm going to actually hit fees first, if that's okay. We don't hide around that either. So our fees every year, the most you'll pay is 1% on your account. The average is about 60 basis points. So it's 0.6% of a percent. In any scenario, if it's 1% or less, I can tell you that's 99% for you. It's less than what you're currently paying. So that's how, it's a scale. Our fee schedule starts at 1%, and it goes, the bigger your account is, the smaller percentage fee it is with us. So as you invest more, your account grows, your basis points percentage goes down. So that's how the fees work. Your fees are paid for out of your IRA account. We don't charge your credit card, or you need to send a check or anything like that. But as far as solo 401ks, it is a hit. And a lot of our entrepreneurs that started businesses have opened up solo Ks. Solo Ks are a 401k plan that we will establish for you. The benefits of that, a solo K, is typically you're able to contribute a lot more. Some of you on here are like, hey, I can only contribute $5,000 or $6,000 a year. I need to contribute more. I'm behind the game. If you have a solo K we set up for your business, you can contribute a lot more based upon how much money you make. And so we'll share with you those percentages, but you can contribute almost all the way up to like $60,000-ish per year. So that's one advantage of a solo K, is you can invest more and contribute more into your retirement account. Number one. Number two, you can borrow money. You can borrow up to 50% or $50,000. So no more than $50,000 or 50%. So if you got $100,000 account, you can borrow 50,000. If you got a $200,000 account, you can only borrow 50,000 still. That's a nice another benefit is you can borrow that $50,000 for absolutely anything. You can go blow it on black in Las Vegas. You can go on vacation. You can go invest the money. You do need to pay it back over a 60-month period. But what's cool about it is when you pay it back, you have to pay it back with an interest rate. It's usually prime plus 1 or 2. And so that interest rate, who do you pay? You pay yourself. So that money that you're paying back to your retirement account is actually interest you're paying yourself. So having a solo K is great for those that want to potentially borrow money or contribute more money, and use it for those reasons. So there's definitely a good benefit. We have many people. I'd say 25% of our clients are doing solo Ks. So it's a good percentage.
And I'm getting a lot of questions. A lot of people are saying, so is this better or the specially designed whole life better for what we teach with, the money multiplier? They're really two different things. The specially designed whole life that we teach, the BYOB stuff, is for non-qualified money that's in your savings, money that you just make earning, a paycheck. This is for your qualified money. If you work a job and you set up a 401k, but then you left that job, that's pretty much all of us, right? Or you started an IRA, and the money's at Fidelity. That would be the money that would go here. But there is some crossover because you can do both. And a lot of times it does make sense because use solo case. So putting money into the specially designed whole life doesn't give you any tax deductibility. Setting up a solo case, now you can get the tax deductibility. You get the ability to take loans, 50,000 or 50%, whichever is greater. And you get the ability to kind of invest in a lot of the same things. I'll just pick on Private Money Club. So there can be definitely crossover. I mean, I have self-directed IRAs like we talked about earlier, and I do a lot with the banking. Greg does both as well. And a lot of you on here are doing both. So you don't really have to say, is it this one better or that one? They're really different. They're both good and you should be using them both, but they're both for different kinds of things and different kinds of money, qualified versus non-qualified. And that's the best way to answer that.
One thing I was going to add before I forget is someone asked the question, what's in it for you, Chris? I'm also going to soft pitch you and Steven. A lot of people have also asked, your clients that open up accounts with us, they're like, okay, my account's open. I got my money here. Now what? I know you get the Private Money Club, but also I know people have asked you guys, you've told me about it, that want to invest in kind of the deals you're doing. And you guys have your fund, it's open. And they got you have a fund. I know you can contact you or Steven and talk about how you can move your retirement funds or a part of them into this kind of opportunity fund, where Chris is one of the managers. I know that, and clients are making, and I'm kind of sharing this because it happens often where people open up their accounts and then maybe a month goes by and they're like, I don't think I want to go buy rental property now, or it's too much work. I'd like to do something more passive. And so I know that's something you and Steven have. So definitely message them if you're interested in learning more about their fund. I know it's high double-digit returns, the expectation on those funds. And so, and look, there's something we didn't talk about, but you introed for those of you here in the beginning, is today's marketplace. I mean, I am so excited about next year. When there is craziness happening in the market, when people are flooding the market and the ups and downs, there is so much opportunity. Sure, the rates are slowing down real estate, but what happens when that happens? There's going to be awesome terms opportunity. You're going to be able to get properties for better terms and negotiate a great upside on different real estate deals. And so I'm looking forward to a great next year in real estate. I'm a real estate investor. I always have been 10 years before I started this company. And I'm really looking forward to the next year. And I know you are too, Chris. So yeah.
Very much. Yeah. I mean, especially with the fund, we just opened a new fund. And the cool thing is most of you have never heard about any of our funds because they're private. And a lot of times the funds subscribe very quick, which means, hey, you get in early and the early bird gets the worm, and then we close the fund because there's just no room for new investors. But right now we have two funds. We've done a bunch of other ones, but we have two funds available. And the reason we create funds is not everybody wants to go on Private Money Club. Let's be honest. Not everybody wants to learn how to underwrite a deal. They don't know what they're looking at. They get nervous. Some people just really like the mutual fund concept that they do with their Fidelity account. They're like, well, I put money in it and it grows, but right now I don't like that volatility thing. I wish I could just have the line that people like, right? Versus this line. Which one, so a lot of people desire this, but then they don't really want to sit there and worry about trying to figure out how to lend and do all this stuff. They just want to put their money somewhere and just go about their life. Well, that's what the funds are. So we're doing all the work, and what we're doing is doing all the lending. We're finding the opportunities, we're underwriting them, we're taking the first secured position with the fund. And then all we're doing is for people that, that we have in our private groups like this, we're just saying, hey, listen, if you want just that passive money, you don't want to deal with any of the other stuff, that's why the funds are there. And we have two kinds right now for two different types of people. One is just your traditional fund. It's a debt fund, which means we lend money out. We take first secured position on really good real estate deals and always looking for opportunities. And then we just pay you a fixed rate of return. And that rate can vary a bit depending on the term. You can do it for as short of a term of time as 12 months and the longest, let's just say, I think it's 36 or 48 months. And that's about 9 to 10%. So you can kind of pick and choose what duration and what interest rate you're going to get based on the duration. So that's great for people that just want a fixed income. They just, maybe it is a fixed income. Maybe they're retiring and they just say, hey, I need an income. So if I figure this out, at 9%, my income's covered. Great. We've got you covered with cap flow. So I'll put Steven's email up and you can, we can do a call and set that up, or that would be Andrew. But then there's other people that they want a fixed return, but what they also want is in this line, they want some bumps. They want that to look like this. They're like, wow, that's great. You get the steady income, but what if you guys are making all the money? This is what we always hear. You guys are making all the money on the real estate deals you're investing in, and right, you are. And that's going to be even bigger next year and the year after. Because as you guys are all seeing, the markets are going down. Now real estate's starting to go down. And what does that spell? Opportunity. And because we just created a fund to capture that downside opportunity when people can't support, a lot of people took on too much risk. Hey, we might even end up having to buy some of these properties back from some of these hedge funds if they keep going the route they are. I mean, we created this new fund to basically take advantage of those opportunities. It pays a lower interest rate, but it is a fixed preferred interest rate. And then every year we're hoping to have high double digits because of the opportunities that we're finding. We're actually going out and finding storage, like storage facilities. You've seen them, right? The storage, why am I forgetting that? Storage facilities. And we're investing in those. And we're really taking a lot of time being incredibly careful in what we invest in, because we don't want to take something on that's risky. We want to take something on that's got crazy amounts of upside, and we're willing to wait for that opportunity. So we're raising for that one right now, and you definitely should book a call because it's very interesting. We've never done a fund like this before, and it's going to make people a lot of money, because when do you make money? When everybody else is losing money. That's how you become incredibly wealthy. So that's what this fund is designed to do. So I'll put Steven's, Safari, there you go. Drew just said that was another fund we did called Safari. It's closed to new investors, but Safari, what we did is invested in mobile home parks. So that fund is been doing really phenomenal. But again, you can't get into that one anymore. So the two that we have right now, I'll put Steven's email up. If any of you have interest in that, then we can do that. So just real quick, this is for the new one that has the big upside on the back end. Look like Greg maybe lost internet there, but at Snaggy at Chris.
I'm back. You can hear me.
There we go. So this is for the I'll just call it the Opportunity Fund. And we have a brochure and all sorts of stuff we can send you on that if you're interested. All right, so there's the first one. If you guys just want just steady, easy, just the mailbox money, it's Andrew at Chris Naugle, and that would be for cap flow. So there's where you go if you're interested in either one of the funds. And again, these are private funds. They're not ever advertised to the public. They're just brought to people like you who join us for these awesome events. All right, Greg, let's get back to some of these questions as we kind of wrap. Actually, we're already over the time, but we'll just hit a couple more questions. And folks, like if you're interested in setting up a self-directed IRA, or just getting on the phone and asking more questions, because obviously there's going to be more questions you're going to have, especially after you talk to your significant other, book a call with Brandy. I'll have her put her email up there again, and just ask as many questions as you want. Go over your existing accounts and talk about some of the opportunities and the different things that are going on. Brandy is phenomenal. She's helped so many of our money school clients. I mean, so many. And she's just a rock star. So you got to get to know her. But Seth was asking, how is this different than a SEP IRA? A SEP IRA is a simplified employee pension. Greg, do you want to handle that one? There's no difference.
The same rules apply for, so by setting up an account with us at Horizon, none of the rules change if you were to have a SEP at Charles Schwab. Rules as far as IRS rules go. What you can invest in is the only difference. So you can have a SEP, self-directed IRA with us, which allows you to contribute more typically than the $5,000 or $6,000. Typically you can get up to like 20 or 25,000. But there's different advantages of having a SEP. Typically it has to do with more contributing more. But whatever the rules are, they're the same across the board. If you're at Charles Schwab or if you're with us at Horizon Trust.
Yeah, I think that's just one big mistake people make. They want to make all these, they're like all SEPs and simples and 401ks. Oh, well, how is this different? It's not. It's exactly the same. It just gives you control. Just puts you with a custodian that actually allows you to do all this stuff. So whatever kind of retirement account you have or that you can dream up, it's going to be available on this side as well. So you're really not changing anything. You're just changing the custodian, and the custodian then allows you and gives you, the guidance and everything you need to get the self-directing done. This last question is a really good one for you, Greg. It's actually geared right to you. Greg, I had originally planned on using my IRA money to purchase an investment, but I couldn't get to the money in time while the opportunity was open. Can my self-directed IRA LLC, so this is probably a checkbook IRA, buy my share of this investment that I already purchased by paying me back over time? That's a good question. I wouldn't even know the answer to that.
If I understand this correctly, the answer I believe is no. Again, this could be good for a strategy discussion, but you can't have your entity or you personally pay back a retirement account interest. So if that's the question, Anonymous, the answer is no. So yeah, I don't know if I totally understand, but you can't pay yourself back over time.
And then I just saw this one over here. I don't know if you saw that one, Greg. It was interesting from Jeff. He said they're realtors. They have an LLC for their business, and they have a solo 401k QRP set up. I funded from 2 other sources. Very beneficial structure, but still unsure of how exactly to use it. Is this something that you'd help us manage? So I want to just hit on that. So one thing that we've done with Greg is, for everybody that sets up a self-directed IRA with Horizon Trust, we literally created here. If you're familiar with Money Multiplier, we have a thing called the mapping team. And the mapping team is probably the single thing that sets us apart from our competitors. It's exactly what you're asking about here. Is the mapping team would be what you're looking for. So we just said, well, the mapping team works so well for our BYOB clients. Why not do the same thing for our self-directed IRA clients? So we created a money movement team. So everybody that sets up an IRA has access to the money movement team, which is where we'll do exactly what you're asking. Is where they'll manage is a weird word to use, but I'll just use your word, and then we can kind of, define what manage means. We're not going to manage it for you, but we're going to manage your expectations and show you kind of what different investments that you bring to us would do for you. We can't manage it. Or would, create a new one with you first. So Jeff, I think first thing, if you're having issues knowing how to use it, definitely just move it over to Horizon Trust. I mean, that would be easy. You just transfer the same exact setup over to Horizon Trust, and now you have access to money movement team, to Brandy, and all the resources that Horizon Trust has. So Greg, I don't know if I stole the thunder on that one, but I'll turn it over.
No, you're good. That's good.
All right. And then let's see, Mark's got a couple questions. Does a self-directed IRA have to be funded with cash or equities, or is there a way to put other asset classes in? Yeah, I mean, you can pretty much there's a lot of asset classes. You could put gold. I mean,
Well, you can't, the
business.
thing is though, you can't move an asset that's already owned by you individually or your LLC. So if it's owned by you individually or your LLC, you can't move it into your self-directed IRA. It's the other way around. So you'd have to put money, you'd have to contribute new money into a retirement account, and then that account would then purchase or fund or be part of a new investment. But as far as what things you can go into, it's almost limitless.
So folks, again, just kind of as we wrap up, I know we're a couple minutes over here. We really appreciate your time. And, I love it. You're all the 5%ers. You're not the 95% because you're here investing your time. You're not investing your money, with us because this is free, but you're still putting your energy, your effort, and your time. And your time is your most valuable asset that you have. So I want to commend all of you for being here to learn something new. Hopefully you picked up 1 or 2 golden nuggets. Hopefully you're setting up a call with Brandy so you can ask more questions. And, Greg's just been amazing for us here at Money School. He's been a dear friend of mine, and my self-directed IRA as well as my wife's, as well as my stepmother. And God, Lori, Greg, you never met her, but she loves you, man. She gets her statement. She's like, Chris, look at how much money they made me. I'm like, they didn't really make you money. They just set your account up. But, she's right now, she got a deal through Private Money Club paying her 12%. She thinks she's died and gone to heaven because prior to doing that, she was always having money in 401ks and that money ping pong. She always like, what do I do? What do I do? I'm like, get out of it. And that's what she did. And now she's making 12% and she's just loving life. So I appreciate that. You've helped a lot of my family and all of our clients.
Well, thanks, Chris. It's good having you. And it's always good talking to your tribe and your followers and those here on this call today. So thank you. We're here to serve first and foremost. We want to help you and give you, as much information so you can make a good decision. So we're here to do that for you. So thank you.
Awesome, folks. So hopefully we served you well tonight. You got some good knowledge. And this whole thing was recorded. Shauna will get it edited and then we will get it out to all of you. I believe an email will be sent to you or it will be put on the YouTube channel. So if you guys haven't already gone to that YouTube link that was up earlier, go to @TheChrisNaugle on YouTube and just subscribe. All the videos get put there, but I think all of you are the special folks and pretty sure you're all going to get an email with the edited version. So with that being said, it's been fun. Brandy, thank you for everything you did. Greg, thanks for everything. Have a good night.
Thanks, guys.
Night, guys.